from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, Bitcoin is pushing towards record highs again. This is the cryptocurrency pierces $57,000, the highest level since May. We discuss the momentum for the latest surge. Plus, Facebook in defense mode. Shares continue to fall as the social platform's whistleblower confirms meetings with lawmakers in Europe, as well as the Facebook Oversight Board here in the United States. What this could mean for consumer trust. And everyone is talking about it. Squid Game, the South Korean phenomenon, continues to make waves and can potentially be the biggest original hit for Netflix. Why foreign films could be the streaming service's secret weapon going forward. But first, we'll get to all of it in a moment. But let's get to the markets. She's back. Kriti Gupta, welcome.
Well, Caroline, thank you. Red on the screen today, and it's funny because if you look at the numbers, you wouldn't really think the day started off that way, but it really did. You saw that tech outperforming for most of the session, Caroline, until the last 30 minutes, a nail-biting last 30 minutes in which those big tech names, you know them, your Apples, your Amazons, your Microsofts, they dragged the entire market down. And look at where we ended up. The S&P 500 down 0.7% on the day. You see that with the NASDAQ 100, even the New York FANG index down 0.5%. Taking with it even some of those Chinese ADRs flat on the session, which actually ended up doing pretty well during the entire trading day. I want to show you a terminal chart, though, because one of the big highlights of today was a pretty interesting call from Citi, none other than Michael O'Rourke, coming out and saying, ditch tech, get into banks instead ahead of earnings season kicking off this week. This is a pretty interesting call, Caroline, because you've seen in the last couple of weeks, you can start to see that little bit of a pickup in line with yields. People saying that the way to play this rate liftoff that everyone is pricing in, everyone knows it's coming, is to slide right back into banks, and the way to do it is to get out of techs, of course, the culprit behind the sell-off in the recent weeks. I want to end, Caroline, with some good news, and that, of course, is cryptocurrencies. Those all in the green this morning, or I should say today in today's session, not this morning anymore. But crypto, Bitcoin, ending up flat on the session, but actually pretty strong, up as high as 4% to one standard deviation move, and taking with it all of those crypto stocks, even Robinhood. Of course, we know that trading platform gets a lot of that revenue from crypto in particular. Earlier in the session, that was a bit of a concern. Right now, kind of a positive at the end of the session.
Well, it's good news if you're along those markets, Kriti, for sure. Thank you, Kriti Gupta, with all the market moves. Let's stick on crypto. Let's stick on Bitcoin, because as Kriti was just saying, 57,000, first time since May. In past rallies, there's often desperate search for some sort of reason. Jill Gunter's with us, co-founder of Open Money Initiative and Slow Ventures principal, joining us for more. And Jill, first and foremost, congratulations on the marriage and the change of name. But secondly, talk to us about these numbers, the push higher. What's behind it, do you think?
Yeah, no, it's been an interesting climb out of the depths that we saw back in August and September, now eclipsing, I think, its levels that we last saw in May. And, it seems to be happening on fairly sizable volumes, which would normally in these markets indicate that it's institutions coming back into play. And there have been a few headlines that I think have lent themselves as tailwinds to these markets, most notably just in the last few days. Gensler, of course, at the SEC coming out and saying that he does not, in fact, aim to ban all cryptocurrencies, and some people interpreting some of his remarks as being bullish for the possibility of a Bitcoin ETF. So a few tailwinds to point to, but as ever in these markets, there's a lot of mystery to the movements as well.
Jill, talk to us about the overall flows that you're seeing or hearing of that are happening between Bitcoin and Ethereum and some of the other protocols, because it really feels as though Bitcoin and Ethereum have always been dubbed sort of the gold and the silver. How much are we seeing institutional money as well as retail money take Ethereum and some of the other protocols more seriously?
Yeah, so when I speak to the institutional flows, a lot of that does still center around Bitcoin and Ethereum specifically. Bitcoin, most of all, of course, still being the blue chip, or the gold, as you put it, Caroline, rightly. But increasingly, we're seeing interest from institutions in moving sort of down the ranks of the crypto ecosystem to get access to other layer 1 protocols, many of which are coming and nipping at Ethereum's heels now in terms of developer adoption, in terms of end user adoption, and so forth. So there you have the likes of Solana. Slow Ventures is a major investor in Solana. You have things like Polkadot, Avalanche coming for Ethereum, and all of those tokens have ridden those tailwinds well. You also, though, have app coins. So these are applications that have been developed on Ethereum that have their own tokens, and so your own ways of expressing views, not only on Ethereum as a whole now, but of course on these specific DeFi applications and so forth. And then finally, it wouldn't be a crypto segment if we didn't touch on NFTs and the new models that, of course, we're seeing people take as they approach investing in those new types of assets that we're seeing altogether.
Talk to us a little bit about Solana, because, of course, this has really been dubbed the sort of Ethereum killer. You, as you say, Slow Ventures, an investor there. What took you with that particular protocol? What is it about Solana and the growth profile that you like so much?
Yeah, so Solana from the get-go has been all about trying to solve developer problems. And they've done a great job in terms of targeting developer acquisition. They've run a series of hackathons and grant programs and so forth that have been very successful. They now have over 1,000 active developers in the ecosystem. And that now has translated to the growth of end users in the ecosystem and of the applications on the platform. And so whereas you see within the Ethereum decentralized finance ecosystem, which of course has been around longer, is more well established in many ways, there's about 90 billion in total locked value in that ecosystem. You've now seen over the last few months the rise of Solana applications to now have about 10 billion locked in there. And the same trends hold true as you look at the user base of it, as you look at wallets, which is a good proxy for the number of users in any of these ecosystems. Wallet downloads. Solana is currently seeing about 100,000 new wallet downloads per day. So that's, a rough proxy again for the type of growth that they're seeing in that ecosystem.
And you just mentioned the good old non-fungible token, NFT. I felt like it was a very bubblicious kind of area a couple of months ago, but now people really seeing the long-term possibility of creating real value, real return, particularly those for artists in the making. Solana-based NFTs, how big a seismic shift is that for people being able to go and create?
Yeah, exactly. So Solana's been investing heavily in the NFT ecosystem. FTX, which is one of the major crypto exchanges out there, FTX US has actually just announced their own foray into the NFT marketplace space. So a sort of competitor, if you will, to the likes of OpenSea, which of course is more Ethereum focused. FTX will be basing this marketplace on Solana. And so that's yet another kind of bullish signal, I would say, around the protocol. So that's very exciting. And again, it all comes back to what developers want, what end users want, which, at least relative to Ethereum, is increased scalability, increase in throughput, in the ability to get transactions through the system, and also, of course, as ever, lower fees, which is always a hot topic of conversation whenever these things take off within Ethereum.
And of course, FTX CEO Sam Bankman-Fried has liked Solana for a little while as well, so continuing to see the growth there. Jill Gunter, really great to have some time with you. Stay well, co-founder of the Open Money Initiative and Slow Ventures principal. Meanwhile, let's talk about Robinhood, because it's kind of feeling the heat. There's a looming share sale by early investors. Also, remember, the whole regulatory environment for cryptocurrencies becoming a little bit more transparent, but is that a headwind to the stock potentially as well? Remember, this is the darling of the US retail and trading mania. Bloomberg's Shonali Basak is here to join to talk more. First and foremost, crypto regulation. Is that positive, negative on Robinhood longer term?
Normally, it is a positive for a lot of the folks in the crypto community. But for Robinhood, let's see what it means in terms of them being able to offer more products to their customers. At the end of the day, that's what this is really about. The ability to create wallets, the ability to compete more heavily with Coinbase now that more and more of its users are adopting crypto. There's also payment for order flow, as we've been talking about all year long. To what extent does this start to weigh on their revenue generating abilities? And then, Caroline, even more than regulation, which has been something that really resurfaced today in a filing, for selling stockholders, trying to sell more stock as early as this week, is the idea that just the numbers might be going down as well. What will the next quarter look like in terms of earnings? We know that JP Morgan has pointed out that app downloads have gone down quite a bit on a topic that I can't actually wait to cover more as more people move to things like sports betting instead and retail activity starts to change in the stock market.
Yeah, for full disclosure, my husband does work over at Coinbase. But what do you think of Robinhood in terms of the share sale, in terms of, this always happens when a company goes public, many have lockups and then they start to expire and you start to see some selling pressure. Is that something to be worrying about, or people go buy this dip?
It's funny because part of this is just perception, the idea that people are getting out just after the IPO. But the reality is it's very common, right, for early stockholders to be selling some stock. You see folks like D1, which we know did later rounds, also reducing their exposure, though not selling out completely. They're not also, I think, a common misperception. People think that they're selling at this high, but they're actually selling quite closer to its listing price. So they're selling at about 35 bucks. So it's not like they are just cashing out at the all-time high. So
not calling the top.
Exactly. It's not calling the top. But, you know, with that said, we follow the big money, right? So you want to see people buy and hold for as long as humanly possible, though we'll see where this goes from here. The earnings period will be the next big catalyst.
And one you'll keep a trained eye on. Shonali Basak, we always thank her for her time. Now, of course, we continue to see celebrities flocking to hashtag crypto Twitter to announce their participation in crypto, in NFTs, as we were just discussing with Jill. The latest, none other than actress Reese Witherspoon, caught my attention. She tweeted about her first purchase of NFTs, adding she would love to know about the amazing women creating non-fungible tokens. Jill Gunter should get over to her. Meanwhile, coming up, Facebook shares continue to fall as whistleblower Frances Haugen gets ready to meet with UK and EU lawmakers. We talk about Facebook's defensive strategy. That's next. This is Bloomberg. So just 1 week after testifying to Congress, Facebook whistleblower, of course, has now announced she will meet with a Facebook oversight board, tweeting that she is looking forward to sharing the truth with them. This is Frances Haugen, of course. It's in addition to meeting with lawmakers in the United Kingdom and the EU later this month, we understand. Bloomberg's Kat Wagner has been all over the ongoing, fallout really from what initially was a focus on perhaps Facebook understanding the ramifications that some of their products have on mental health, particularly those of the younger, and choosing what Frances Haugen calls profit over people. Kurt, the main test always is whether or not this really hurts the share price, whether or not this really hurts the business model of Facebook. Because time and time again, when we've had these sorts of crises of PR, it hasn't always hurted the overall business proposition because, small businesses are so dependent on it.
This time does not necessarily feel different, but we'll learn at the end of this month because Facebook will have earnings. Now, of course, by the time they report these earnings, most of the drama has happened at the end of the quarter. So we actually may even have to wait longer until we really have a full quarter of this kind of news being out there. But as you mentioned, the stock price is down. I do feel like there is some concern that in DC in particular, there's a little bit more cohesion between Democrats and Republicans about, actually implementing some type of data privacy law. So it's clear that people are a little spooked here that this might have a long-term impact on the business.
A long-term impact on engagement, on usage, on the consumer?
I think it's more on Facebook's data business, right? So I guess if someone were to come out with a law that said, hey, we're going to, kind of restrict what types of data you can use to target people, or, hey, we're going to force you to kind of expose the technology behind your algorithm, or maybe get rid of the algorithm in some way, that's the kind of thing that would really hurt Facebook's business. And I think that's where, if you're an investor, you have to be a little worried because it directly impacts Facebook's money-making ability.
What about Facebook's response to this particular crisis vis-a-vis others?
It does feel more aggressive this time around. And in the past, for example, with Cambridge Analytica, I realized that was a few years ago at this point, but we saw Mark Zuckerberg be a lot more active. We saw him out speaking a lot more often. Now it's Nick Clegg, it's their head of policy and communication who's doing most of the talking. And we've seen some of their PR folks on Twitter being a little bit more aggressive in kind of sharing the company message and even countering journalists and things like that. So it does just feel like Facebook is being a lot more aggressive this time around in this crisis than they have been in previous issues.
Talk to us about what happens next. We know, of course, that Frances Haugen's going to the UK, where Damien Collins, the MP there, has been very much focused on these sorts of issues. We know that the EU wants to speak with her as well. But what next in terms of the unfolding story from your perspective?
Well, I think we have to keep an eye out for, even more stories to come. We know that Frances has given thousands of documents, maybe tens of thousands of documents, to the Journal, to regulators, and she hinted in her testimony, she brought up some issues that were important, including kind of the January 6th riots in DC as issues that she saw with Facebook. And we haven't really seen a lot of stories necessarily touching on that. So I have to imagine some of these documents contain things we still haven't seen. So this is not, necessarily the end of even the data dump, in my opinion. And so from that, you're going to continue to see a lot of bad press for Facebook, I'm sure.
And we'll keep a close eye on how, its valuation reacts to it and indeed the users. Kurt Wagner, thank you so much for keeping us up to speed on all of it. Meanwhile, coming up, promising studies from Merck and its new COVID-19 pill. But will the FDA approve it, and how could it change the future in fighting the virus? That's next. This is Bloomberg. Now let's talk biotech. Let's talk about the potential breakthrough in the treatment for COVID-19. Drug maker Merck is looking for emergency use authorization from the FDA for a pill that it says could cut the risk of hospitalization by half. Quick Take's Nicole C. explains how it all works.
This little red pill is molnupiravir, Merck's new antiviral pill. The experimental medication has been shown to reduce the risk of hospitalization or death by about half. That's according to one late-stage study of adults with mild to moderate cases. It's the promise of a drug that's easy to get and take at home that has people excited.
You can potentially have it at home, which is the thing. If you can keep people out of hospital, particularly when they are infectious, because they're infected, but you can give them something that reduces their risks by at least half. Even in those high-risk groups, it's still, thankfully, under 20% of people end up in hospital. But if you can halve that, well and good. Still means 7 out of every 100 people at risk who get infected end up in hospital.
So how does it work? By inhibiting the replication of SARS-CoV-2 through lethal mutagenesis, which is a mechanism that reproduces the virus's genetic material to make mistakes.
This is all about catching people when they have an infection and they don't have that overwhelming immune response. So you have to catch them before that point. So that testing and identification of people is really critical. And then you have to have a way of catching the people that don't respond to that medication.
A 5-day course of molnupiravir will cost $700 per patient, according to media reports. Are there side effects? Interim analysis found no increase in adverse events. Only 1.3% of participants taking molnupiravir quit the therapy due to an adverse event, compared to 3.4% in the placebo group. Still, molnupiravir will need to be assessed in a much larger group of patients to properly determine its safety. Merck plans to make 10 million treatment courses by the end of this year, with more doses slated for 2022. Finally, it won't replace vaccinations, which remains the most effective shield against COVID.
Great little intro there. Let's discuss a little bit more as it hopes to get FDA clearance of the drug by Halloween, less than 3 weeks away. Robert Langus is with us, Bloomberg Science and Health reporter. And Robert, the likelihood of getting it within that time frame, talk to us about the prospects of this pill.
The FDA, the U.S. Food and Drug Administration, is going to have a very busy few weeks because they're looking at booster shots from Moderna and for J&J. They're looking at pediatric vaccines with the Pfizer vaccine. And now they have this application from Merck and its partner Ridgeback Biotherapeutics, the first potential anti-COVID pill. And that's, potentially it's a very, very big advance because it's just so much more convenient and easier to take a pill. for a virus. And what we have right now, which are either remdesivir, which is given in hospital, that's the Gilead drug, or the various monoclonal antibodies that you have to go and get infused. That's just a much more difficult prospect. And the problem is with a fast-moving, highly infectious virus, you need to treat people that are at risk, really right away. So having a pill that you could take at home or that's in every drugstore eventually, that could make things just much, much, much easier. And, think of this, ultimately what they're gunning for is, you think like Tamiflu, the influenza drug, but for COVID. They're gunning for something like that. And Merck's, likely to be just the first. There are other drug makers working on this.
But as you said, like this mental image of it being available in any pharmacy, it costs a lot of money. How are they going to be able to square that circle?
Well, it's not clear, what the market is kind of going to look like, long term. This and that cost is not kind of a commercial cost. That's what the U.S. government is paying for the first, initial batch of doses. They paid $1.2 billion in a supply deal, provided the U.S. government 1.7 million courses. So, how it's going to work, in the long term, if it's a commercial product, is not totally clear. But you're right, at that price, that might, inhibit. If that price stays the same, in the commercial market long term, that could, in theory, inhibit broader use. But there's other ones coming out there potentially. Results. We're waiting on results from Pfizer. Also has a pill they're testing in large-scale trials. There's another Roche pill. So there's other ones that could potentially be coming soon, and this, could just be the first, and it could be, a significant new market. And right now, this Merck test, I'll say one other thing, it was tested in unvaccinated patients, but there's a potential, for the broader market long term, you could even use this as a prophylactic. If someone gets sick in your family, right in your household, say you have a 3-year-old child gets sick with COVID, and you don't have to be quarantined, don't have to spread it. Everyone else in the family could quickly be prescribed, COVID-19 pills. That has to be shown, but it's a potential future market.
Robert Landgraf, really interesting take. Thank you for all the analysis. Coming up, we're going to look at the future of gaming. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York, in for Emily Chang. Let's get back to today's market movers because Kriti Gupta has the breakdown for us.
Absolutely, Caroline. It is earnings season is upon us. You are going to see it kick off this week. And something to really keep in mind, something on the macro level to watch is those earnings revisions. Remember, we had an 89% beat rate in the last earnings season. Can we keep that up? And so far, it kind of seems like we're losing some of that upward momentum to revision. So this week is going to be especially crucial when we talk about the banks and see what kind of tone it really sets as we do eventually get to some of those biotech and tech companies that we are so waiting for. I want to get to the intraday action, though, and look at some of those subsectors in particular. We had a negative day for the broader markets, but it looks like that kind of trickled down to the subsectors too. And I really want to highlight that this last minute move really happened in the last 30 minutes of trading. For a good chunk of the session, NASDAQ Biotech and the Golden Dragon Index, those Chinese ADRs, they were pretty positive for the majority of the trading day. And of course, the Golden Dragon Index, those Chinese ADRs, haven't had that great of a time, but a lot of that had to do with, of course, the Meituan food giant delivery agent having over in China really getting a lesser than expected fine from Beijing on some of their antitrust practices. So really interesting to watch to see if some of that momentum continues. I want to end, though, with a subsector that, Caroline, was actually my very first beat when I first started covering stocks, and that is video games. Of course, we all remember last year when those video game stocks were surging because people were at home, people were spending more time and more money towards some of these platforms. But take a look at what's done year to date. You have seen this kind of trend line come all the way down. And of the three major players, I want to compare it to Ubisoft out of Europe, actually lagging the likes of Activision, Take-Two, and EA, Caroline.
Yeah, interesting industry moves there, interesting idiosyncratic news as well. Kriti Gupta, fantastic. Thank you for setting us up because we're going to talk a little bit more about gaming. And in fact, playing in the overall metaverse is apparently here. Axie Infinity, you've heard us talk about it, the play-to-earn model coupled with blockchain is allowing players to earn real rewards from playing over in the Philippines, to now the popular Korean show Squid Game. You might be consuming it when you're on Netflix, but now it's infiltrating Roblox, mini games. You can experience the gut-wrenching twists yourself. The gaming industry, it's expanding fast into the so-called metaverse, and our next guest knows a thing or two about it. Super League Gaming CEO, Ann Hand. And it's great to have some time with you, Ann, today, and talk to us about this transition of, 2D entertainment into what eventually will become more 3D, more VR, more AR? How much are you seeing this interlinking between the entertainment world and the gaming world?
Yeah, absolutely. Thank you for having me, Caroline. You know, I used to run marketing for thousands of retail locations around the world. And if I could have flashed forward to the current person I am today, the message would be loud and clear. I think any brand out there, if you don't have a metaverse play happening, you need to think about it. It's the one way that you can connect to this young audience of gamers right where they are with their passions in a super organic, natural way, and create a persistent relationship around your brand, one that carries over from digital to physical. So it really is the kind of modern ad model that's at play here.
Okay, so if I'm playing Squid Games on Roblox, these mini games, how do you, I know you've just made an acquisition, an ad platform. Yeah. You must be thinking a lot about how you make that experience organic. How do you?
Yeah, absolutely. So Bloxbiz is a company we recently purchased that has a relationship with 75 of the top Roblox game titles, reaching 25 million monthly players. So it's just a massive footprint inside the Roblox metaverse. And there's really two primary ways that we interact with those brands and connect those brands. The first is we have embedded advertising, ad units in the game. So just like if you're playing a game and you're running outside inside that universe, you're going to pass a billboard, right? Just like you would if you were driving in your car down the road. But then we also can take it a step further. So recently we did an activation with Nickelodeon for a new TV show they were launching. And we did a 10-day takedown of the game where we actually reskinned the game themed around the characters of the new Nickelodeon show. And in those 10 days, we drove 50 million visits to that game, and we also equated to about 164 years of gameplay in that 10-day period, all around those beloved Nickelodeon characters.
Talk to us about advertising inherently within gaming. Of course, there's been a lot of pushback about advertising within social media and a lot of the ethics that come involved in that. How are you taking that, thinking ahead of the game in that respect?
Yeah, absolutely. I mean, look, a big piece of Super League has always been about democratizing good gaming. And we have a pretty high bar on code of conduct. We have about 5 million strong registered young players on some of our owned and operated properties. So we take COPA compliance very seriously. We're not pushing products in these games from these brands. We're just integrating the experience and actually enhancing the experience. So when I talked about that Nickelodeon example, there were ways that you could unlock cool game modes and you got benefits through that experience that we create around those characters.
Talk to us about, of course, what Super League Gaming does is bring live esports entertainment and experiences directly to the gamers out there. And I'm interested in how that's looking, live esports, bringing crowds together. What we were seeing sort of in its early innings was put on ice. Is it coming back?
Yeah, I mean, I've talked really openly to my investors about this on earnings calls. Look, in the early days, we ran esports tournaments and experiences as one way to aggregate players and to create content around them. But Super League is so much more than esports. Now, I have said before on Bloomberg that the notion that esports is just a $3 billion industry over the next couple of years. I jokingly said I wouldn't get out of bed for that, and I wouldn't. I think there's so much more potential for esports, but it's early days and it's narrow. And what you'll see Super League doing, and Bloxbiz acquisition is lining up perfectly with that. Is what we told investors is that we would increasingly take on a bigger share of the metaverse. Bloxbiz does that we would have an underpinning of creator economies. So we're thinking much more broadly beyond esports. And so when our Roblox game designers participate in our ad model, they get a cut of the action for that. And that really democratizing as well who monetizes content is a big thrust of the company. And then the third thing is that this is a modern ad model. We're talking about $20, $25, $30 CPMs, and again, deep engagement. And so those were the three lanes that I told investors, if we do inorganic growth, you're going to see us lean into these three lanes. And luckily for us, Bloxbiz, who's a company we had already been partnering with previously, checked every one of those boxes.
Deep engagement from an inclusive audience? I mean, you sit here as a female CEO, and many have been shining a light on how little women are winning some of these big esport competitions or even playing in it. It's not always the most inclusive of places to go to for people who aren't, white guys, basically. How are you opening that up?
Yeah, I mean, that's really what drew me to Super League. I needed to go through my own education of who a gamer is these days. Gaming is beautifully diverse. It's a level playing field on the gender side of things. Even with the right peripherals, a physically challenged player can level up and play against people who don't have those same challenges. So there's something that's very fair and inclusive about it. And we saw an opportunity to build a brand that actually stood for that. And also, frankly, it's just a smart business model because there's 3 billion gamers on the planet. Just in the United States alone, 45% of those players are women. And so we want to speak to the widest audience of players and creators and streamers who use our tools and work with our platform because we want to reach the biggest prosumer dollar base out there as well so that we can really scale the company.
Super League Gaming CEO Ann Hand, really great to have some time with you. Thanks so much today. Meanwhile, more content. The new James Bond movie opened as the #1 film in North American theaters. Still, No Time to Die fell short of the pandemic-era opening record set last week. The movie took in an estimated $56 million at the box office. Not as strong as some were predicting. Meanwhile, coming up, making employment leave less messy. We'll speak with XYZ venture capital partner Chauncey Kerr-Hamilton and employment leave startup Cocoon CEO Mahima Chawla about how they want to help you take your paid leave. This is Bloomberg. So have you ever tried taking leave from work, whether it be parental, medical, caregiver, even bereavement? If so, well, quite often you might have found things are pretty tough. They're complicated. The process to deal with, requiring you to navigate the company, the government, the insurance laws. Well, this is where Cocoon comes in. It's a new employee leave platform. It wants to simplify all of it. I'm pleased to say that the Cocoon CEO is with us, Mahima Chawla, and XYZ venture capital partner Chauncey Kerr-Hamilton. Joyous to have you both with us. And I want to talk about the expansion plans and about the ways in which you're raising funding at the moment. Mahima, what birthed this particular company? Why did Cocoon have to be made?
Yeah, hey, Caroline. Thanks for having us. So Cocoon really got founded when we saw a lot of our friends and coworkers go through really, really tough leave experiences. So as you pointed out, whether it's a medical leave, a caregiver leave, parental, bereavement, the process is so complicated for the individual going on leave, navigating all of these different leave laws, figuring out how to get paid, filing different claims. Also really complicated for the employer, navigating a lot of leave compliance with employees spread across the state or the country, even other countries, and in terms of figuring out really complicated payroll calculations. So after we heard a lot of these personal stories about how difficult it was to take leave and how much time went into the admin of leave instead of being able to focus on the reason that you were taking leave, we realized that there had to be a better way to do that, especially in this day and age. And so we set out to really build that experience that makes it so simple and straightforward for the individual and really, really easy for the employer as well to allow their employees to take leave.
And Chauncey, of course, you wanted to get in, to participate in the funding. How much do you see the demand growth for this? How much do you see the necessity, particularly here in the United States, which, I mean, shockingly is basically the only developed nation that doesn't have a mandatory sort of paid leave, particularly from a parental perspective, but the administration sort of shining a light on this, and maybe we'll see some change from a government level.
I certainly hope so, Caroline. So when I first met Mahima and Amber and Lauren and what they were building, I was like, immediately wanted to work with them. This was not only a product that I knew needed to be built firsthand. I met Mahima when I was 5 months pregnant with my second child and had already taken a parental leave and knew how opaque the process is. And I could see the demand on the employer side. You know, I think that it's table stakes now for employers to offer competitive leave packages, whether it's parental, medical, bereavement leave. And when we went to go due diligence on this investment, the immense pull there was something that we knew we needed to be involved with this business from the first day.
Mahima, when people are now working from home partially, and when there is also such a need, what we've seen in the COVID crisis is the caregiving crisis, basically, whether it be mother with children unable to go into school, the father, or indeed looking after your elderly loved ones or those who fell ill from COVID. How has you managed to adapt to that? How much bigger is the market becoming day in, day out?
I think leave is not a new problem. It's always been extremely challenging for somebody to take a leave. But with COVID, two things happened. One, there was a lot more distributed workforces. So when employers were thinking about, I have an employee in California taking a caregiver leave, and an employee in Washington taking an organ donor leave, and so forth, spread out across, again, the country and even other countries, I think the whole process of actually administering a leave policy got a lot more complicated. So it was one huge factor. And the other is actually, I think COVID really changed employee mindset. It made employees realize that what they really want is for their employers to step up in these really big life moments. They may happen infrequently, but when they happen is when you really need that help and support. And so I think the expectation of the role that an employer plays really changed during COVID times as well.
Chauncey, what are perhaps some of the challenges? We've talked about a lot of the opportunities, but the challenges about growing these sorts of businesses, scaling them, and ensuring that, you know, the companies want to enroll them and help iron out some of these difficulties?
You know, haven't seen any of those challenges yet. I mean, there's immense pull for this product at the middle market, which is where Cocoon is selling into right now. I think the only challenge we might foresee in like the days to come is that how many companies can we onboard and how quickly can we onboard them? Because truly, it's, I think that the perspective around benefits has shifted so significantly since the pandemic that companies know that in order to retain and attract talent, they really need to have a competitive benefit offering, and that it has to include a better paid family and medical leave.
Mahima, what tends to be the biggest pain point? Is it, obviously it's the opaque nature of it, but sometimes it's, you know, filling your role when you leave, ensuring that you leave the company in a good, strong place when you're exiting. But for the employer, what are their key pain points?
I think for the employer, a lot of it boils down to compliance, being compliant with the many, many changing leave laws at the federal level, the state level. A huge component is that pay for an employee can often come from a lot of different sources. So some pay might be coming from the state of California or Washington. Some pay might be coming from a disability provider. The employer is then trying to figure out, well, what is our own paid policy? How much do we owe this employee during the course of their leave? What does that mean for taxes? And so there's the administrative aspects that become really hard for an employer. And when their time gets sucked into that, there's so much less room for the empathy and the big-heartedness around leave in terms of actually supporting that employee who's going out or supporting the manager and making sure that the team is set up for success. And so with Cocoon, we're really trying to take away all the admin and the headache and stress so that for the employee, it can be really straightforward and they can focus on why they took leave, and that employer can focus on really supporting the employee in the ways that they need it most.
And very briefly, Chauncey, can you see ever the federal landscape making things slightly easier in any way, or is it always going to be very difficult from a state-by-state level, let alone international businesses?
Yeah, no, as you mentioned, Caroline, like I think that the U.S. And compared to our peer countries has one of the worst leave policies because we don't have one. And so I'm really hopeful that our policymakers can get something passed that would offer like every American the opportunity to have paid family and medical leave. I think it's table stakes. I think after this pandemic, people are tired. We want to take care of our loved ones. We want to have the space to take care of our own health. We want to have the space to take care of our children. And so I'm really, really hoping that we see some action on this front soon.
Really fascinating conversation. Cocoon CEO Mahima Chawla and XYZ Venture Capital Partner Chauncey Kerr-Hamilton. Amazing the steps being taken and some of the intricacies that go into building such products. Meanwhile, coming up, we'll take a look at how the Squid Game phenomenon is taking over the world. What that means for where Netflix is headed. That's next.
The Apple Watch Series 7 is here with a bigger screen and a full keyboard, but unfortunately, use the device without an iPhone. A decade ago, Steve Jobs outlined that every major Apple device should be standalone and sync directly with the cloud instead of a Mac or another hub device. As anyone with an Apple Watch knows, you still can't buy one, set it up from the product itself, and simply download all of your data from the cloud. That limits the potential user base of the Apple Watch, and it of course excludes people who may want to just own an Apple Watch plus an iPad or a Mac, and even one day people who want to use an Apple Watch as their only computing device. With much larger screens, independent apps, faster processors, new developer tools, and the ability to connect to cellular networks, the time is now for Apple to allow customers to buy an Apple Watch and set it up without ever connecting it to an iPhone. Making the watch a completely independent device could make the product a bigger part of Apple's product portfolio, increase sales, and expand to customers outside of the Apple ecosystem, even those with phones that run Android. I'm Mark Gurman. This is Power On.
And you can sign up for Mark's weekly Power On newsletter at Bloomberg.com. Now, let's talk about the biggest pop culture trend in the last couple of weeks that I haven't yet viewed: Squid Game. The Korean show is on pace to be the biggest hit in the history of Netflix. It is the most popular show in more than 90 countries, unprecedented for a Korean show, and really, well, any television show, ever. Ross Benesh of eMarketer joins us now to talk about this phenomenon. And a phenomenon it is, because I think I've seen it more on social media, I've seen it more on TikTok, than I actually haven't viewed it on Netflix yet, Ross. What is it about the scale, the network effect that Netflix can bring these sorts of international hits?
Well, yeah, with Netflix, they have over 200 million paid subscribers, and they're scattered all throughout the world. So when they have a show that really catches on, they're able to reach so many people in so many countries in a way that almost no other media company can, because media is often localized. But Netflix has this global network that really allows a hit to become an international phenomenon.
I sort of think of the one that I viewed for a bit. I didn't love it as much as the rest of everyone, but Money Heist came on. And of course, that was Spanish-speaking, became incredibly popular. I know Scarlett Fu here absolutely loved it and kept telling me about it. But how do they pick these winners? Because are they picked to a certain extent? Does it just rise through the algorithm naturally? Or is it that they shine a spotlight on the ones that they really think will have this cross-country, international winning formula?
Well, it happens both ways. With shows that they spend a lot of money on, like Stranger Things, they do spotlight it heavily and market it heavily to try to goose those viewer metrics. But with Squid Game, they didn't seem like they did that. It was more random, and it caught on through the algorithm and people watching it and people sharing on social media and all this like word of mouth contagion. But sometimes they get surprise hits because they have so many shows and one just kind of catches fire. Squid Game did not have, as much money spent on it as their, Bridgerton did, for example.
And to that end, helps their profitability, right? Could this be quite a winning formula from a bottom line perspective?
It can be. And with international shows, that's great for Netflix because they're trying to diversify their revenues. Right now, about 40% of their revenues come from the United States and only about 10% from Asia. So getting a big hit from a South Korean studio is great for them because, in the future, they want to have much more than 10% of their revenue coming from the Asian market.
And yeah, Great British Bake Off seems to be something that has caught the attention of my American colleagues. Of course, I've been watching it for years when it was over in the UK. But how much does it stop churn? How much does it stop people jumping over to something else? Or can Disney Plus, can Amazon, can they all repeat the formula?
With these shows, I believe a lot of them are to reduce churn. Netflix, like in the U.S., already has so many subscribers, they're not adding many. They want to focus on stopping people from canceling, and having more international hits increases the time that people spend on the platform, which reduces their likelihood of canceling. But, it also allows them to expand in those markets where they have a small share of their revenue. Now, if other countries can just repeat that formula, I'm not sure. Netflix has been good about giving local producers and directors autonomy to create the shows they want for those markets. If a media company is very heavy-handed and wants things to conform to a pre-existing intellectual property, that can be a tougher sell internationally.
Good points, Ross Banesh. Great to have you on, eMarketer. Meanwhile, that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow when we'll be joined by Miami Mayor Francis Suarez to talk all things crypto capital pouring into the city. I'm Caroline Hyde in New York. This is Bloomberg.